So good evening everybody, Paul Langham here from Exact Trading. Welcome to tonight's wrap up. So this evening I'm going to be looking at the US dollar Japanese yen 4-hour time frame, and very interesting setup is actually currently underway. What I want to point out obviously is, to begin with, is these first this bunch of levels here, which was rejected quite swiftly on a previous occasion, around about the 10th of August, and not that long ago, and we're back down here again, and we're actually sitting on the levels. So the difference is this time is that we've come down slowly to the levels. This previous time we had a big move. I'm just going to blow this up slightly. We had a big move to the downside, and with this candle here, which was rejected straight away. Here we have three coming down. We're actually on the level. Now what does this mean? Well, for two things: either it's going to go up or it's going to go down. The thing to do is not to guess. It's the same thing again. You know, there is no point in trying to go short here, because you may well get the trade of the century, and it may well come down like this and look very good afterwards when you tell the story. But alternatively, it may just pip down to this green line and then swing back up there as well. So it's a pretty dangerous position. What I would do is wait for it to play out. There's plenty of people in this market who want to play it out for you, and if we do get beneath this level, that's the much more attractive trade down to here, because we have the possibility to get down to here, up underneath the levels there, and away we go down to the downside. So it's really a question of trading intelligence. There's going to be a lot of people, if you go on all the forums and Twitter and all that, they're all going to be saying it's going to break, it's not going to break, and there is no necessity to do that. Let's just let them do what they want to do. And don't forget, there's a whole bunch of levels up here. Pierced it once, pierced it twice, and then bang, to the downside. It's all over the place. This was rejected as well. This is nicely rejected off there, and theoretically this should bounce again. But again, this is the whole point about trading. Just go to have a look at what we've been doing here. There's 1, 2, 3. 1, 2, 3. It's about fourth, fifth time. But the whole point about trading is that these things is the exception that makes the rule. We've got now a series of those three. There is lower highs. It does appear to be pushing to the downside, and the approach is very different. Wouldn't surprise me if it breaks, but let's just wait and see, because we have this slot down here waiting for us. Much better to go for that than try and actually predict something on a knife edge there. So that's where we are with that one. Okay, let's have a look at the euro. I had actually an email from someone today, said you keep predicting the direct, putting these sell orders up here and this type of thing, and keep predicting the whole way we get up there in the first place. Why don't we just take the long? I mean, yeah, I like to take short side reversal. I like to take short side reversals. This was not a guaranteed move by any chance. It has played out, almost the way we said it was going to play out. In fact, almost to the T, because we were talking about, puncturing this level here, coming back down one more time, and then off we go like this. And I think this area here actually may be a little bit too early. What we might need to do is just move that limit order up a bit. Actually, again, I don't want to be greedy, but the whole point about this game is to get it right. And it does look like we might get the whole way back up to 115.20. It's not that far away. It's only 60 pips. It doesn't sound very much at all, and it isn't in a market that moves quickly. You can see what you can do in 4-hour time frame. So I'm just going to hold things as they are there for the moment. Okay, and then I just lastly wanted to talk about the New Zealand euro New Zealand dollar, actually, because this one we've been tracking this for quite some time, and it just refuses to break down. And the whole point about this is, you mustn't fight a market. If that is the level which we were looking for, we were looking for it to drop back into the range. That was the idea, and it's not happening. Just going to put this one in again so we can see exactly what we're talking about. If it's not happening and it's going the other way, then you need to be the other way. It's as simple as that. The whole thing is about not getting married to the position. And here we are with price, looking for this type of thing. Doesn't appear to be happening. I said give it another couple of days, and actually that's the proof of the pudding, because it looks like we're going to go up this side. So what I'm going to do with this one now is just stand aside for the moment. I'm going to wait for it to make a move up into this level here in between the two lines, reverse off that, and then look for the long. So if you go to the weekly, You can see that, yeah, it is actually upside since 2016. Actually, it's taken some time to do its stuff, but it does appear to be on the cusp of actually breaking out. So it's a multi-year highs coming up, which is quite an important junction. If that does go, then I suspect we're going to go up to one of those like that. So that could be a trade going into the autumn, could be an absolutely cracking trade. So no point in rushing it. This is a question about keeping powder dry, looking for something like this, and off we go. And you've got this multi-year highs are breaking and up to somewhere like here. Could be a very, very nice trade, and this is all clear blue water here, so that is the potential. It doesn't necessarily mean it's going to happen. It could still drop down into the range, but it doesn't look like it at the moment. Okay, that was it for tonight. Hope you enjoyed that, and I'll be speaking to you again in the morning.